Every major market crash in history had the same warning signs. And right now, in March 2026, every single one of them is flashing red. Today, we're breaking down the 5 signals that have predicted every crash for the last 100 years, and why what's happening right now is unlike anything we've seen since 2008. Let's go. Signal number 1, the inverted yield curve. When short-term interest rates are higher than long-term rates, the yield curve inverts. It has predicted every single US recession since 1955. Every one, without exception. Right now, the US yield curve has been inverted for over 18 months, the longest inversion in modern history. Historically, a recession follows within 6 to 18 months of inversion. We are already inside that window. Signal number 2, the Shiller PE ratio. The Shiller PE ratio measures how expensive stocks are relative to their earnings over 10 years. The historical average is 16. Above 30 is considered dangerously overvalued. Right now, the Shiller PE ratio is above 34. We are in bubble territory. The only times it was higher were in 2000, just before the dot-com crash, and in 2021, just before the biggest rate hike cycle in 40 years. Signal number 3, the VIX, the fear index. The VIX measures market volatility and investor fear. When it spikes above 30, panic is setting in. When it stays elevated for weeks, a crash is coming. The VIX has been elevated and unstable for the past 3 months. Investors are nervous, and nervous investors sell. Signal number 4, credit spreads widening. When companies have to pay significantly more than governments to borrow money, it means investors don't trust the corporate sector. Credit spreads are currently widening at a pace not seen since 2019, just before the COVID crash. Signal number 5, geopolitical shock overload. Oil at $115. A nuclear plant struck in the Persian Gulf. Trump threatening to destroy Iran's oil terminal. A G7 emergency meeting. Eurozone inflation jumping back to 2.6%. Markets can absorb one shock, maybe 2, but 5 simultaneous shocks. Energy, nuclear, trade war, inflation, and geopolitical. That is a system under maximum stress. Every single one of these signals is active right now, simultaneously. So when does the crash happen? Here is the honest answer. Nobody knows exactly. Anyone who gives you a precise date is lying. But here's what history tells us. When 4 or more of these signals are active at the same time, a significant correction of 20% or more happens within 3 to 12 months. Every single time in the last 100 years. We currently have all 5 active. That does not mean you should panic. It means you should prepare. Move a portion of your portfolio to cash. Increase your bond allocation. Look at gold as a hedge. And if you're invested in overvalued tech stocks, now is the time to review your exposure. The crash is not a question of if. It's a question of when. And the smart money is already moving. Are you? If this video gave you clarity, smash that like button, subscribe, and share it with someone who needs to hear this. I'm Kurt, and this is Investopia. I'll see you in the next one. This video is for informational and educational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions. And 88.